Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again at the gold market. So this week we have really sketchy information on gold. So we'll take a look at the headlines, just few headlines on the gold market performance, mostly has relation to Fed meeting and no actually specific opinion, specific driving factors for gold directly. So mostly gold stands depending on the same global events, fundamental that we have discussed in our report on the Forex market. And actually, the conclusions that we have made on the Forex makes the same impact on the gold. So ongoing process with the rising interest rates promises nothing good to the gold market. It's non-bearing asset, and attractiveness of the gold is reducing. It means that recent statistics and investors' behavior shows that they are gradually losing the interest to the gold. So we see minor changes in the sentiment, minor changes in commitment of traders report, even on the background of the Fed meeting. So if you compare results of the activity of the investors in the euro currency, for instance, before the Fed, and on the gold, there stands, well, the difference is huge. So in euro currency, we see really drop of the interest rates, open interest for approximately 12%. On the gold, you see just dynamic changes. So overall performance here, you can see that it stands very weak, which means that investors are not very interested with the current situation on the gold, what's going on. And in general, in the long-term situation, speaking on long-term, gold keeps stability currently, still shows some reasonable reactions on the strong long-term support area, as we have here, long-term monthly support. And probably we could see reactions on the different long-term levels as well later. But that should be, in which should treat it only as a pullback, as a retracement, as respect just to the strength of the level, but not as a new tendency. Because long-term bullish trend here probably is over on the gold market, taking into consideration what we have on the interest rates, what we have on the dollar. In general, guys, I'm mostly tending to agree with the BlackRock analysis, whereas the fund manager tells that as soon as in June, we could hear the first verbal intervention. Jerome Powell could start to prepare markets for tapering of the bond buying. The first step that they will probably take, it will be not the rising the rate, but they will cut the taper, the bond purchasing from the market, reducing the value of the bond purchasing, which pushes the interest rates higher. And only after that, somewhere close to the end of the year, in the beginning of 2022 probably, they could start thinking about rate hiking. The BlackRock analysts tell that Fed reaction follow sooner than you are expecting. So, and I am mostly tend to agree with this statement because I think that Fed indeed could change their mind in the perspective of the 6 month probably, 6-8 month. I think that some changes could happen. So, and that brings nothing new to the gold market. That's my opinion currently on the gold. So, if you trade, investing on the gold, trade on the long term, personally, I don't want to take any long-term investments in the gold market currently. So, short-term trading, taking the long positions in the bounce from the strong supports as we did, and as we do right now, that's okay. But not to keep those positions for months, for weeks. We should not marry any long position currently. So set the reasonable targets, grab the result, and wait for the next step to the downside. So approximately, we should follow in this manner. Of course, if we speak about on the factors that we can't forecast, unexpected patterns, indeed, it could be some political situations where gold could return their shine. Now you probably heard what difficulties in relations, again, between the China and the United States. Maybe some other tensions could happen across the world, so that could make impact on the gold. But we can't control it, and that's why we can't include these factors in our training plan, because we just do not know. Well, speaking on the short-term situation, what we have? Daily chart is well known to us because it changes very slow, and we discussed many times already. So gold stands at some reaction on the monthly support. At the same time, we have here acceleration to the downside on this leg, especially if you could see it on the high time frames on the weekly chart, for example. But in a $10 range, just below the market, we have multiple target clusters of the important targets. This is not the minor targets, guys. This is important targets. First of all, major XOP on the daily, right from the top, 1669. 1648 is major OP on the weekly chart. This A, B, C, top, OP. And final extension of the butterfly, 1643. So this is really a huge cluster of the targets. And I would suggest that gold should reach this area. Speaking to the upside, we considered few levels where theoretically we could consider taking the short position. First one is right here around 1760, where the market stands right now. Next one is around 18 even. So this confidence resistance you can see, and it's accompanied with the daily overbought. So we would not consider high standing levels just because they are not important. They stand beyond the overbought area. So that's why only these two levels are interesting to us. On the 4 time frame chart, we're dealing with the same ABCD pattern as we already talked about. So its OP stands 1762. There's potential an area where market should show reaction because this will be agreement resistance, the OP. And theoretically, well, it is possible that upward action to the OP could be finalized by this butterfly pattern. So that's just a hypothesis. So suggestion, but maybe it could happen. At least the butterfly here looks logical. So forming the butterfly, if we'll get this clear upward action with the butterfly, could be used to consider taking the short position with the downward reaction. Next target stands 1802 as XOP that creates agreement with the next level, with this confluence. But currently, guys, in this performance of the gold, you can see here, well, I do not know what the driving factors could push gold right here. Maybe if collapse on some interest rates or something of that sort. Well, currently we do not consider it, mostly focus on this first target. Additionally, I would say that I will not be surprised if downside action will start right from here. Because, by a few moments, first of all, because we already have mentioned on Friday this reversal action. So you can see this downside action is greater than the previous up, which means that this is reversal type of action. Usually after reversal action, market shows deep retracement and then shows downside continuation. So that theoretically could happen. If you plan to take a position here, this information is not valuable to you. So it's just, you could ignore it. Just focus on your trading plan, keep an eye on this target, and once it will be hit, you could take the position. This information might be useful for those who use the gradual entry. So some traders take the position slightly before entry point, then when the market hits this level, add more at the major level, and then control the overall position on average price. So if you're following this gradual step in the trade and you consider taking the short position, this might be interesting because market stands somewhere around 618 resistance of this drop, and theoretically, this downside action could start earlier without reaching the OP. But any scenario currently will be actually good, whether you are waiting for OP or you consider step entry or something of that sort. Why I also think that it could happen, it's early downward action, is just because of the action on the hourly chart. So take a look what's going on here. That's, guys, by the way, our Gartley steeple to sell that we have traded. It shows minimum downside pullback here, but still it was not really small, it's approximately $10 per contract. Well, and overall type of action, take a look here. This collapse is some kind of a gradual upward performance. It's very no signs of something of that sort. So attempt acceleration to go higher right at the target. Maybe on Monday something will change. But currently, mostly looked at retracement up to the reversal swing. And it means that market could start dropping even from that point. But I'm not calling it to change the trading plan. It's just my observation, so maybe it will be useful for somebody. That's actually what we have in the gold market. Let's see what will happen around major resistance levels that we have, and hopefully we'll get good entry stops for taking the short position here.